How's it going, everybody? It's Das here. So things are getting bad out there again. Things are getting ugly. And based on the title of the video, you probably know what we're going to talk about today. But if you don't, we're going to be talking about the CV, the rise in cases, how, in my opinion, of course, this is going to affect the economy, the stock market, what I personally expect from the stock market, and we're going to talk about what I am planning on doing here in the next coming weeks, next coming months. So sit back, relax, take a sip of your coffee. Trust me, you're going to need it for this one. Go down below, get your $50 from M1 Finance, simply deposit $100. We each get $50 to invest with, and you guys could check out my Patreon. All of those are linked down below. And with that being said, let's talk a little bit about what happened last time the economy shut down, because again, there's a serious risk now with this Delta variant running crazy. There's a serious risk whether I'm for it or not. It doesn't matter whether I'm for it or not. That's not the point of this video. There's a serious risk they're going to shut down the economy again. They're going to going to shut down the economy, and we saw what happened last time this happened. We went from 340 on SPY to 218, and since then, accompanied with all of the stimulus from the Fed, and of course the economy reopening, new money flooding into the economy here, buying stocks, we've seen SPY go from 220 to 440. In other words, yes, it doubled in about a year and a half, which is unbelievable. And QQQ also doubled. It went from about 230 in February 2020 to about 170, and from 170 it went to 368, which is more than a double in the same time span, where SPY, like I said, also doubled. So at this point, we're at all-time highs in the markets. Economy is opening up. And by the way, the economy, although the Fed and people in the media like to make it seem everything is sunshine and rainbows, the economy is not doing that great. I mean, if you guys look at the jobs, or not the jobs reports, or the jobless claims numbers, people are still filing every single week, 400,000, 450,000 in terms of filing for jobless claims. So there's many Americans, hundreds of thousands, millions of Americans that are still struggling every single week here. But not the scenario, but the what's the word here? The narrative is that, oh, the economy is recovering, this, that, and the third, and we could talk all day about the new jobs being added. But the truth is, these jobs being added, and I don't want to go off topic here, but this is important. These jobs being added are jobs that aren't brand new for the most part. They're simply jobs that were lost a year ago that are being reinstated. You know, these aren't new jobs. They're just jobs that are coming back, if that makes any sense, right? So at this point, with the spike in cases, and let me pull up my Safari tab very quickly to show you guys, they are talking about another economic shutdown. And I don't like timing the market. I talk about this all the time, and you guys have heard the quote, time in the market is better than timing the market. So I'm not telling you guys to wait out, and I'm not telling you guys to do anything. I'm not a financial advisor, but in my opinion, it's stupid to sit on the sidelines and wait and see if they shut things down, which in turn will crash the stock market again to try and get in. I don't think that's a good idea, because who knows? They might not shut things down. They might not do that, and in turn the market would go down. And in that case, you would miss out on gains, dividends, and so forth. So either way, I don't like timing the market. Time in the market is better. But listen, look at this chart, right? This is Safari. You guys can see ever since, this is the all-time data, I believe, right? Data, whatever. Ever since March, excuse me, guys, ever since March 2020, right? That's what's shown on the graph here. We can see the slow rise from March 2020 into the summer 2020 a year ago. Then we saw that drop, and then we saw that massive rip all the way to about January 2021, and I believe this is when the vaccine started rolling out. I forget exactly when that was, to be precise here. But let's just call it right around here. And then, boom, the cases started going down like crazy, down from 230,000 a day, 50,000 a day at the peak, all the way down to just a month ago, 2 months ago, in June, there was only about 11,000 cases a day. And now we're seeing a huge spike to now about 150,000 cases a day. We're over what the level was by a long shot back in April, just a couple months ago. So now we're seeing a huge spike in these cases because of the Delta variant. And I'm not a scientist, guys. I'm the furthest thing from a scientist. But from what I've been reading, this is a more transmittable version of the virus. It's a bit more contagious or something. I don't know. But all I do know is this is a serious problem right now, especially if we start getting to those levels. And I believe there's a possibility of this happening if we start getting to the levels that the cases were at before the vaccine rollout back in January, December, February even, when we were in the hundreds of thousands of cases a day. If that were to happen, listen, maybe not. We might not go to a lockdown like we saw in March, February, April of 2020, but we might start getting restricted again. 25% capacity, 50%, masks again. This is serious. It seriously could happen. And I believe that not only will push the markets down, I think it definitely will, but it could be for a prolonged period of time. But on top of that, which might contradict what I just said, the Fed might come in. Actually, they might is not the word. They will come in and they will use their tools to their full capacity, like they always say every meeting. And I'm telling you guys, if the Fed comes in, when the Fed steps in and they start throwing money at the market again, we are going to see a recovery in the stock market, very similar to what we saw back then. So let me backpedal a bit. If we get a shutdown, what do I think the market is going to do? I believe wholeheartedly, what's the word here? Wholeheartedly, the market will sell off. Will it sell off 50 or 40%? What was it back in March 2020? 35, 40%. Will it drop that much? I don't think so, because back then there was, you guys have to understand, take yourself from right now and go in the time machine, go back 18 months. How scared were you in March, myself included? I was super scared. No one knew what the future was. I remember many people were saying, sell all your stocks. It's the next Great Depression. It's over. We're going to 1,000 on the S&P 500, which obviously didn't happen. But back then, there was so much more fear because of the unknown of the virus. And sure, there's still a bit of an unknown, but the fear is not nearly as bad as it was, at least from my point of view and in my opinion from what I'm seeing out there. And for you, it might be different. I don't know. Let me know in the comments. But I believe the fear is not as bad right now. So in that case, people are going to be panic selling like crazy if we get another shutdown. Maybe it goes down 10% on SPY, maybe 15%. So that means SPY would go from 440 maybe down to about the 50 moving average here on the 3-year chart at about 385. That'd be a nice 12% pullback. Does it go down to the 180 SMA, which would be about a 25% pullback? I think that's pushing it. That's probably pushing it. That would put it in the bear market territory. That could happen, though. So overall, what I'm looking to do here is I'm continuously buying my stocks in terms of ETFs. Like I said, time in the market is better than time in the market, but I'm keeping a little bit of extra cash on the sidelines just in case we get the shutdown and we get that 10, 15, 20% drop, whatever it is, because listen, at that point in time, what we're going to see is a lot of the individual stocks out there that I own, that you own, they're going to be down a lot more than what the overall markets are down. For example, let's say Pinterest or something, right? S&P goes down 10%. Pinterest will probably go down 20%. Nvidia, this might be the time to buy Nvidia if we get that drop. Nvidia might go down to 150 or something, if that makes any sense, right? And like I mentioned, the Fed will step in. The Fed will pump liquidity into the market. And thus, what's going to happen, guys? Stocks will recover, maybe not as aggressively as they did back in March 2020, but they will recover nonetheless. And if you guys recall, back in March 2020, they compared this to 2008, right? Remember in 2008, there was obviously the housing bubble, the huge crash, and the Fed wasn't as quick to respond with their tools in 2008. That is why the drawdown was much more drawn out, right? It was a longer sell-off, longer bear market. But this go around with this crash, they were so quick, excuse me, guys, they were so quick to throw money into the market that is why we saw such a quick recovery. I mean, within a month, 2 months, this thing dropped 40% and recovered the same 40%. It was crazy. I mean, from end of February to March, it dropped 40%, and then by June, it was pretty much right back where it was in February. I mean, you can't make this stuff up. That is because of how aggressive the Fed was in terms of just throwing money at the market. So overall, guys, we're about 11 minutes in. I covered everything I wanted to do cover in this video. This is not fear-mongering. I'm just keeping it real to keep you guys prepared. That is part of my duty here on YouTube. Even though I'm not a financial advisor, I'm just here to spit the real to you guys, the facts out there. And that is what we're that is what we're seeing overall out here in terms of the CV, potential shutdowns, how it's going to affect the markets. And my plan, again, I'm just going to continue buying my ETFs for the long haul, and if we get that big drop, I'm going to have cash to buy some of my favorite individual stocks. That's what I'm doing. So overall, if you guys like the video, hit the like button, make sure to subscribe, and check out the M1 Finance link for $50 free from them. And you guys can check out my Patreon if you want all my real-time moves, whether it's options, long-term investments, trades I'm making, all real time. Those are linked right down below. And if you guys sign up to the top tier on Patreon, you get a morning update video every single trading day, exclusive to the top tier. Check it out. Link down below. I'll catch you guys there. Thanks for tuning in again. As always, keep crushing the market. Stay safe out there, guys. Peace out.